Can Wall Street stay patient as long as the Federal Reserve can, as we await confirmation of a soft economic landing? And where within this uneven equity market should investors be focusing their attention? Let's bring in Joe Terranova of Virtus Investment Partners, Courtney Garcia of Payne Capital Management, and Adam Parker of Trivariate Research, all three CNBC contributors. Joe, high-level stuff here. We got used to this idea that economic resilience, earnings coming back, the Fed not doing anything but poised to perhaps ease was enough for the market to get by. Maybe the breadth of the market is not necessarily showing a lot of cheer today, but has anything changed after the Fed meeting, after some of those numbers this morning?
No, I don't think anything's changed after the Fed meeting, but I do think in the last month a lot has changed when you're thinking about how to invest, because it is, can you go beyond AI and technology to invest? And right now the answer to that is it's very difficult to do so. If you study performance so far month to date in the 11 S&P sectors, there's only 5 that are higher. And if you look on the quarter, there's only 4 that are higher, while the S&P is 3% higher. So there's a very clear dynamic that's unfolding within the market. We thought that we were getting a broadening out of opportunity, and we thought a lot of that, the catalyst was going to be yields pulling back. Well, what's happened since May 29th? You have a 10-year that's pulled back 40 basis points and a 2-year that's pulled back 30 basis points, and you're not getting the response from the other areas of the market beyond AI and technology. So some things that I've done personally, I added the XLG, which is an ETF that focuses on the largest 50 companies. 50% of that is affiliated with the Super 6. I've added some healthcare names, but it's a tough environment right now to look for opportunities beyond AI and technology.
You know, Courtney, I guess the question is, do you essentially assume that the mode the market's been trading in, you know, kind of narrow, these larger companies doing well and the rest not so much, you assume they have it right and therefore it's going to continue? Or is the relative weakness of the rest of the market creating a chance to make a bet that maybe the market has it wrong, or this is a growth scare that's going to pass?
Yeah, I do think that you want to start to look at other areas of the market here, because what's happening is the 3 largest companies, which is Microsoft, Apple, NVIDIA, now constitute over 20% of the S&P 500, which really hasn't happened since at least 2000. And these over concentrations of markets don't tend to last over the long run. So do we own them? Absolutely. Do I think this is ending in the short term? No, but I do think there's a lot of other areas of opportunity. And especially when you look at artificial intelligence, there's a lot of beneficiaries of that, specifically things like energy, right? You're going to have to be able to provide the energy to these data centers, to artificial intelligence, looking at things like your metals, like copper, which is really used in the electrification and in creating these processes. I think there's a lot of opportunity that's had other than those 3 major companies, which have already just had such a run. At some point in time, you're going to see that come back down.
Adam, I know you've taken a look at kind of what specifically is working and why, perhaps, in the market, whether it's a certain style, is it just the AI thing? I mean, look, I can point to Chipotle and Costco. They're not up because of AI. They have similar looking charts. So what is the market privileging right now?
You know, quality and momentum, right? I mean, I think a lot of institutional investors I talked to are having pretty good years, stock picking wise, either long only or hedge funds. I think if you strip out quality and momentum and sort of the 60 high quality growth stocks in the index, the performance is probably closer to the market, you know, because the alpha on top of quality method hasn't been that great. I actually think it's been more of a broad rally since last November. There's a lot of semis that are up. It's not just NVIDIA. I mean, you can plot Broadcom or others. So there's lots that are up. But I think the reason the market's up is the same story. Financial conditions are easy and gross margins are going up. What you sprinkle, the frosting on top of that cake is this AI dream. And the dream is so awesome that you're in this innocent until guilty proven mode for a while. I just spent the last 3 days on the West Coast, and I can tell you, I think people really believe in the potential for productivity, and something needs to burst that bubble. And I don't think they're going to be held accountable for return on that investment in the next couple of quarters.